Mike, thank you for having us today here in your office, Caliber Home Loans, right?
Thank you, Ever.
Horn, Ever Banuelos with the EB Group. Mike, can you tell us a little bit about yourself?
Well, yeah, that's always an interesting one. So, regional vice president of Southern California for Caliber Home Loans. Yes, we work for a mortgage company, or I work for a mortgage company, but I've always looked at it as an opportunity to serve. I really love what we do in the real estate field. We're able to provide people their dreams. We're able to deliver dreams. And I think that through delivering dreams, we have an opportunity to change lives. Those that we come in contact with and those that we actually don't come in direct contact with through the ripple effect. And so I think there's really something that's cool about our industry where we can have a direct impact on people's lives. And so I like to look at it as we're life changers in a positive way, or can be. And so what I really love about our industry is we have the opportunity to serve. And I really believe for us, that's why we're here on earth, is to serve others and to help others.
Absolutely. I completely agree with you. It's so, it's a big satisfaction when we have this opportunity, to change the lives of many families out there, many people out there. I think that's huge on our end.
It is.
Right?
It is.
How long you been in the mortgage industry?
So what's an interesting piece is this office building we're sitting in right now. I've been in this office building, or coming to this office building, since August of 1991.
1991.
So next month will be 31 years coming to this same building. So I've been doing this for a long time. I've only changed companies through acquisition, which is an interesting piece. So I'm on my fourth company, but that's only been through acquisition. So,
okay. Wow, over 30 years, a lot of experience, through those years helping families, helping people.
Right. And one of the funny things about our business too is I think I've probably learned more about myself than I have about anybody else. I mean, you have to be introspective. It taps into all your different types of emotions that you have when things go right and things go wrong. And in our business, there's all kinds of problems that pop up. And you have to learn how to understand that there's only so much you can control, and what you can control is yourself, right. Which is really hard to do. Right. And so it's learning how to control your thoughts, your actions, and your words, really, at the end of the day. And so it's one of the greatest gifts that I've had with the industry, is really learning about myself and who I am and what I can do and what we can all do as individuals. And I believe that we all have greatness within us, and it's really trying to identify that. Mine happened to be, the career of mortgage banking, which really aligned with me. But I think, for you, you're in real estate as well. And so that's individually, I think, for whoever you are out there, you have a gift. You have a gift of greatness in you. And I hope that people can tap into that with whatever they're doing.
Right. You remind me of a conversation we had a long time ago, maybe like a year and a half ago.
Okay.
We were talking about a client. We were going through a difficult situation with our client. And you told me one thing, what we can do is just find a solution to this issue and move it through, right? And that's true. In our business, in this type of work that we do, helping people is not easy, right? We go through a lot of bumps on the way, but there is always a solution for everything.
Right? Absolutely. And that's the fun part, right? So you come into a situation where somebody's buying a home or selling a home, and there's probably going to be a challenge along the way. And knowing that ahead of time is really good. It prepares you to understand that, hey, we're going to run into a challenge. And it's not that the challenge that's going to be the issue. It's how do we handle that challenge, and how do we work through that challenge, and being able to instill that into the people that we work with, and that they understand, like, hey, we're probably going to run into some challenges, and we're going to work through those together as a team. And I think teamwork, and that's why it's so important, as you're a real estate agent, I'm a lender. It's important for us to partner together and understand that we're a team. And by us collaborating and working together, we can help overcome those challenges that we run into for our sellers, our buyers, our other clients. And so teamwork is really an important piece.
Absolutely.
Collaboration.
I completely agree as well. Communication is key when working with you as the lender, right? When we partner up, we cannot move, the process by ourselves. We need other people's help. In this case, real estate and the lending side, absolutely. We need to be in the same page along the way. Right.
And that allows us to better serve our clients.
That's right. You know what? We meet clients on a daily basis, right? And many of our clients see what's going on with the economy, with the media bringing all these negative stuff in their minds. And they ask me all the time, Everett, should we buy right now or should we continue renting? How will you respond to a client, a home buyer, first-time home buyer mainly?
Yeah, here's my belief. I think you have to look at it as, why are you buying? So I'm a first-time home buyer. Am I buying a home for myself? And if I'm buying that home for myself, do I qualify? First off, right? Do I qualify to buy the home? And I think identifying that right away is an important step, right? Do I qualify, and what do I qualify for? And if I do, can I buy the home that I want to buy in the area that I want to buy in? And how long would I think I would be living in that property? I think a lot of times we hear from the media, it's a housing boom or it's a housing bust. It's either everything's going crazy or everything's going to crap, right? There's very, very little time do you hear anybody in between, right? It's this extreme or that extreme. And I think, look, if I qualify for a home and I can buy a home and it's a home I want to be in and I plan on being in there for 5, 10, 15 years, I think it's a great time. And when I look at it, I was thinking about this because you and I talked about doing this interview today. I was thinking about this last night. When I bought the home that I live in currently in the year 2000, I bought it for today very little.
Right.
But when I bought it in 2000, everybody that was a buddy of mine, friend of mine, in the industry too, by the way, said, Mike, you're buying at the top of the market. The top of the market. Now, what had happened was in the early 90s, real estate kept getting hammered. And then we had a run from 96 of values keep going up. And 2000 seemed like we're peaking. Well, my home was worth probably 5 times what I purchased it for 20 years ago.
Right.
And if you look at the history of real estate, it is on a chart. Now, the graph is like this, but it continues to go up. Right? And so if you're looking short term, hey, I want to sell the house in 1 or 2 years, it's a little different. You might have some values come down a little bit or just flat. If you're looking at 5 or 10 or 15 years, the value of your home is going to go up. Look, 83% of Americans' wealth is generated through real estate. 83% of Americans' wealth is generated through real estate. Real estate is a great investment, especially long term. Right? I think where people get into challenges is when they leverage themselves too much, when they might not be certain that they want to stay, in that home for a long period of time, or they might not even be certain with their job, or they're stretching their finances a lot, or they feel like, I want to continue to be able to do all these things that I did before and own a home as well. Sometimes you've got to cut out the Starbucks every day. Sometimes you've got to reduce some of your other expenses to be able to afford the home. And so it depends on, do I really want to make certain sacrifices? So,
yeah. I had a conversation with a client a couple of days ago over the phone. She called and she's like, I'm interested in purchasing a property, right? I said, yeah, fantastic. We'll help you out. We went through the pre-qualification process and all this stuff. By the end of the day, she talked to her friends, family members. By the end of the day, a couple of days ago, she called me. It's like, you know what? I changed my mind, right? We're going in a recession. Inflation is affecting everyone. I don't know what's going to happen, right? So I'm gonna pause this and I'm gonna come back to you. So my conversation was exactly, what you are saying right now. If you look back 10, 15 years ago, property values were different than what they are at right now.
Right.
Unfortunately, when we communicate these to clients, people who don't know us,
right,
they don't see us in a daily basis because we are not part of their family, we are not part of their friend circle, right? They believe more in what family members, friends are telling them,
right,
and sometimes it's maybe not the best way to go, right?
Right. So right. I think it's really important to have trusted advisors. And a lot of times our family and friends can be those trusted advisors. However, sometimes the people that we're looking to be trusted advisors aren't experts in that field. And so an example would be if I'm going to my family member as a trusted advisor about the knee surgery that my doctor has to perform.
Right.
Probably not the best trusted advisor. Now, I'm not saying that they might not be a good one. Maybe they are. Maybe they're a doctor as well. But you also want to have that trusted advisor within that same field or that level of knowledge. I think that's important. And you also want to be able to separate emotion from it. And so a lot of times we hold emotion to our decisions, right? Especially when we're buying a home. And there can be a lot of fear or a lot of excitement. I could get overwhelmed with excitement, and I could feel like I've got to keep up with everybody else out there that's buying a home. And so our decision-making process is based off of emotion as opposed to logic, right? I'm excited or I'm fearful. That's where we need to take a step away and look at it from a logical basis, right? And that's why it's so important to get pre-approved first. And then the other piece too is, if you look at it historically, over the last 5 recessions we've had, 3 out of those 5 recessions, property values actually went up a small amount, okay? 2 of those recessions, 2008 being one of those, that's where property values got hit the worst. It was, I think, 12 or 15% nationally. There's probably some areas that got hit worse and some that didn't get hit quite as bad. And then if you look at the other one, it was like a % drop in home values. So a recession is not bad for home values. And then if you look at the other side, if we're talking and we're afraid of inflation, which inflation is happening right now, if we have inflation, well, what happens there is home values go up.
Right.
So again, it really comes back to, if I purchase a home now, what do I want to do with it? If I'm talking to somebody that says, hey, I want to flip this in a year or two, you might not recover all the money that you invested in that. You may, but a year or two is harder to predict. If you're out 5, 10, 15 years, you're going to likely, historically, make money on that investment, right? And I think that we look at it, sometimes we don't look at the return on investment the right way. So if I purchase a home for $500,000 with 5% down, I'm investing $25,000. If that property value goes up 10% per year for 3 years, it's $150,000, a little bit more than $150,000 that I've gained. Now, $150,000, my investment was 5%. My investment was $25,000. Now it's $150,000 return in 3 years.
Absolutely.
Right? That's 6 times my money.
That is
It's a really strong investment. A lot of times we're looking at it as, well, I bought it for $500,000. You did buy it for $500,000, but you only invested $25,000. Your $25,000 just turned into $150,000, right?
Right.
And that's how, leveraging basically that money. Now, I don't think leveraging, if you don't have any savings behind it, is a smart thing to do, but that's being able to leverage an investment, taking $25,000, buying a $500,000 property, and now you've got $150,000 in equity.
And I think that's important, like you said, getting yourself pre-approved, right? Understanding the numbers, what your monthly payment will be, right? So you don't go in to become a homeowner and then get in trouble because you cannot continue making those payments. So you're gonna get a negative result, right? Instead of helping yourself with that property as an investment.
Exactly.
Another example, some clients, they are currently renting their place where they are living at, an apartment, maybe a 2-bedroom, 1-bathroom, paying $2,000 a month, right? And conversation, these are real testimonials that we discuss, that we get, you know, in front of in a daily basis.
Right.
Clients who are renting, paying $2,000 a month, they come over like, we want to buy a house, but the monthly payments are going to be $3,500, over $3,000, right? And I think this example, you know, as you explain it right now, if you look at it in the long term, you know, they'll see what the return of investment will be for the down payment that they come in with, the monthly payment that they're going to be bringing every month, right? I think it makes more sense rather than continuing paying $2,000 a month and getting nothing of that.
I agree. And here's the other part. If you buy a home today, you fix that payment. Okay, so let's say your payment today is $3,500. Okay, you fix that. You also have some potential tax benefits there as well.
Absolutely.
Right? Plus you have appreciation. Plus, remember, you're paying principal down each month as well. So you're getting money there. Remember, if I'm paying that principal down, that's also in essence a savings, right?
Right.
Okay, because if my home value is going up or staying the same, I'm still paying the principal down. If I rent for the next 3 to 5 years, my rent is going to continue to increase. And rents are going to increase, especially in an inflationary market. But again, the other part is inventory is so low that rents are continuing to rise. And I think it was in Orange County, California, in certain cities in Orange County, California, 20% annually over this last year, rents increased. 20%. That's more than a depreciation of a home in Orange County, right? So think about that. And those rent prices are going to keep going up and up and up, especially as inventory continues to remain tight. And it will. There's all kinds of data that we can't catch up to the demand that's out there.
And it's a high demand. It's a high demand.
High demand.
In our experience, we put a property for rent and we get 30, 40 applications only for that property. So definitely when you have that kind of demand, rentals are going to be expensive.
Right.
In our current market, we know we are struggling with economy right now through many changes maybe a shift that we are going through, right? Market shift.
Right.
We have some available programs, right, for first-time home buyers, especially. What can you say about those programs?
Look, each state and even each city can be a little bit different, but there's down payment assistance programs that you can come in with little or no money down, which is incredible. Calhafa has a program where they'll give somebody $40,000 to build an accessory dwelling unit, otherwise known as an ADU. That's something that could help offset your payment on your existing mortgage when you buy the property. So there's a lot of different programs out there, and that's what I would encourage you to speak with your direct loan officer, Lisa Peraza, right? And really have a conversation and dig into your situation specifically. There's so many incredible programs out there that can allow you to get into a home that maybe you don't think you can get into. And our job really as lenders and as real estate agents is to create awareness, right? You only know what you know. And it's our job for us to create an awareness around what's available and allow you to make an informed decision, right? And so when we talk about having our trusted advisors, our family, our friends giving us their advice, and that's great, right? We want that. But I think it's also really important for us to be educators and to be able to create that awareness. And we have to separate from ourselves too, right? As a lender and as a real estate agent, because we have to also know, like, we're here to serve, and we don't want to do it, hey, there's an opportunity for me to get a commission, right? It has to be, is this the best decision for you? And I can't make that decision for a person, but what I can do is I can say, here's all the information, here's what you qualify for, here's the product that we can give you, and here's what this looks like today, and here's what it will look like tomorrow, and the next day, and 5 years from now. And allow that person to look at that and say, okay, now let me make a decision. I can't influence you on a decision. I can only educate you on what we can do, how we can do it, and what history has shown us, and where we could expect that to go in the future. Does that make sense?
Definitely, Mike. And that's why it is important to talk to the expert, like you said.
Agreed.
Elisa Peraza, which it's a great relationship that we have with her. She's been helping our clients for a long time, and the way that I see it, when a client comes over to us and inquire about those programs, it's like when you go to your doctor, right? You have to open up and uncover all these financials that you have for the expert to come over with a solution and the best benefit for you. Right? So it's a mutual communication is key.
Communication's important. And look, there's a lot of times we've been through something that maybe we're embarrassed to share. Maybe we've gone through a bankruptcy, or maybe we've, don't have the savings that we think we should have. But look, I'll tell you what, it doesn't matter. I mean, at the end of the day, there could be a solution. And just because something happened to you in a season of your life that wasn't as positive as it could be, don't be afraid to share that. It allows us to understand where you're at and what we can do. And again, that communication on all parties, from all parties, is critical, because we can only best serve you from what we know. And so if I go in to a doctor and I don't tell them about the pain that I have in my ankle, but I'm going about the pain in my hand, they somehow may be connected. But if I don't share that, then the doctor doesn't know. And so they can't best serve me for what's wrong. Same thing as for a real estate agent and a lender. If we don't know everything that's going on in our client's life from a financial perspective and what they want, then we can't best serve them.
Mike, with the opportunity of having you here, we hear from some clients that they want to check with different banks because they may offer different interest rates. What do you think is it? What do you think about that?
I think that's great. Look, I think that people need to do their research. I think there's more to getting a mortgage than just interest rate. And let me explain. If we really want to come alongside our clients and be a financial advisor, be a mortgage advisor, to be able to have them as a client for life. And so it's more to us than just have a transactional situation of getting somebody into a home and then be gone. We want to coach them through that process of getting that home loan. And then we do stuff with post-close. We make sure that our clients are connected with a financial advisor. We make sure that they're connected with a trust attorney. We make sure that they're connected with the right insurance group. We make sure to do biannual mortgage checkups to see, hey, is there an opportunity to reduce your mortgage payment? Is there an opportunity for you to buy another home? Hey, what are your goals today? What are your goals 5 years from now and 10 years from now? And we really like to be able to coach our clients to what their goals were. And those goals evolve and change too as we grow as individuals. And so if we're sitting down together and you and I are talking, and ever you tell me that, look, today I'm buying my first home. Great. And how old are you? Ever? You're 25 years old. That's awesome. Have you thought about when you want to retire? I haven't. Okay, well, let's talk about that. What does that look like to you? And maybe you don't really want to ever retire, but you want to make that choice at 50 years old. I want to be able to make the choice of if I want to continue to work or not at 50. Great. Let's look at how we can help put you in homes every few years. So by the time you're 50, you own 5 homes, the one you live in, and you've got 4 others that you're collecting on rent. And we've shown you how to get those homes debt-free, collecting rent, and have the opportunity to make a decision if you want to work or not work at 50 years old. So I think there's partnering with it. And again, I would encourage people to do their due diligence and research. And that means looking at different companies and talking to different loan officers and seeing which one you connect with better and seeing who you feel that could best serve you and what you're trying to achieve in your life.
I guess it comes back to personalities, right? Who you feel more comfortable working with.
Yeah, who you feel more comfortable with and who you feel that's really going to deliver, help deliver your dreams. Right. And I think dreams, we focus too much on the dream being the here and now. I want to look at your dream for your life. How do we deliver that? How do we get you to a position in your life 20 or 30 years from now, 10 years from now? And maybe you haven't even thought about it, but it's my job as a lender to help you to think about that, to dream your dream, to paint the picture of what you want your life to be. And if I can be a part of you achieving that, that's a victory to us.
That's right.
And that's what we want to do.
And actually we're saying something really important that, remind me of a conversation that I was having with someone today about 401k, right? People is concerned about having enough savings because they are coming close to a retirement age, right? But they think that by having that money set in the bank or in a 401k account, that's gonna, help them. And yes, it will help them, but I think it would be best to have those real estate investments that are gonna be generating income, passive income, for the rest of your life, right? As far as you know how to manage those assets.
Right. I think a balanced portfolio is important, but I think if you look at most people, most Americans, again, I'll go back to 83% of Americans' wealth is created through real estate. So I think that you're able to drive more wealth through real estate. But again, I think a balanced portfolio is important. I think a 401k, I think other savings. And I think then that's why we want to connect you with financial planners so you can make sure that you're set. 401k is huge. Here's a great example. If I'm able to, you buy a house today and maybe the interest rate is 5.5% or 6%, okay? In 3 years, maybe the rates are 4%. I'm able to save you money. That money that you're able to save, maybe you're able to put that away in a 401k, right? And maybe your company matches a little bit, right? So maybe they match 50 cents on the dollar. So every dollar you throw in, they put in 50 cents, right? So maybe all of a sudden you're like, wait, I'm putting a bunch of money now in savings away based on reducing my interest rate, okay? Now, maybe we can look at that same piece and say, hey, not only can we reduce your interest rate, but we can pull out $50,000 to help you buy another property as an investment. Maybe we're not going to save you quite as much, but we're still going to save you a little bit. We're going to put this $50,000 into another property. You're buying another property and you're putting money away in a 401k and somebody else is paying down the principal on your investment, right? So there's all different ways to kind of look at how do you want to invest your money.
Yeah. Mike, property values as of right now, 2022, like any other products out there, right? We're going through an inflation, right? So property values are definitely in the high level right now, the high price value. So I see hesitation from a lot of home buyers, especially first-time home buyers, to move forward and purchase their property. So they pull back, they hesitate too much, right? Because they think property values will go down. You think that's going to be the case in this market?
Property values may go down. They may go down a little bit. I don't see them going down a ton if they do go down. There's too much demand and not enough supply. And so I don't see home values dropping. I really don't see them dropping much at all. I could be wrong. I could totally be wrong. I've been wrong before. But I really don't see a big decrease in values because of the lack of supply and the amount of demand that we have in today's market.
So if property values go down, let's say, right, based on history and your experience, how long do you think is it going to take for them to go down? If that really happens.
Gosh, I don't know. It's hard to say, but what I can say is this, is you have large hedge funds that are buying up properties, a lot of properties right now to rent. Okay, they're not buying them to sell them. They're not buying them to fix them up, to flip them. They are buying them to rent. You also have developers that are building homes to rent, not to sell, but to rent. And so when you look at that, that's going to take more and more homes off the market, creating more demand. Now, if my rents go up, if your rents go up, where does that drive home values? Up, right? If I'm an investor, I'm not a homeowner. I'm not going to buy my first home. I'm an investor. I'm going to buy another property because those rents keep going up. Well, I want to buy a home. I'm a first-time home buyer. Where are those home values going to go? They're going to keep going up. If rents continue to go up, values will probably continue to go up. they might go up at a slower pace. I don't see them dropping much, if anything. Now, again, I could totally be wrong. The whole economy could have a meltdown. We're in a kind of a weird situation right now in the economy. We have inflation, but Q2, we don't have Q2 results yet. But if we actually have negative growth in Q2 of 2022, we'll be technically in a recession, right? Because we had negative growth in the first quarter. If we have negative growth in the second quarter, then now we're in a recession, right? And so they're increasing rates. Eventually, those rates probably will come down. Maybe home values come down at some point, but I don't really think so. I think they're going to flatten right now. I think they're starting to flatten right now. I think that you have sellers who are being a little bit more realistic, but you would know this better than me. I still see most properties have multiple offers.
Yeah, that's true.
Okay.
That's what we see.
I see that homes are selling quicker now. Not quite as quick as last year. There's a 1 day difference. Year to date right now, 1 day difference, right? And how quick a home's selling. It's still historically much faster than before. It's usually like 30 to 45 days. And right now it's a little bit quicker than that.
Right. Yeah. Now, with all these changes in the market, Mike, you being in the mortgage industry, do you see foreclosures coming in the market more than before?
No.
No. Okay.
I was reading something on MBS Highway, Barry Habib's MBS Highway. I was reading something on that the other day. And the average homeowner right now has a 42% loan to value. That means they have more than 50% equity in their home.
Right.
And foreclosures right now are at historic lows. We're not even close to being anywhere near what we were. And if you look back at the meltdown in 2008, you had people buying homes with a 580 score, stated income, with nothing down. Okay. You don't have that today. Your credit profile of an average homeowner or an average buyer is significantly higher than it was. Your credit qualifications, your income qualifications, all those different pieces are much more stringent than they were. And the loan to value, the equity that people have in their homes is too great to walk away from. They have the ability to sell, where before they had no equity, so they just walked away. Today, you have equity. You're not going to just walk away. You're going to sell.
Now, talking about foreclosures, I've seen this in the past, right, where people is going into the trouble of not being able to make their payments, but for some reason they stay quiet. They don't come back to the bank after they get those notifications.
Right.
What is the best thing that they should do when they start getting in trouble, when they start getting behind their payments?
Look, as people, unfortunately, we can be prideful, right? And so what I know about human behavior, my own behavior, is we don't like to ask for help until it's too late, right? We think we can get out of it. We think we can get out of it. We think we can get out of it. And that's not just from a financial sense. It's in a lot of different areas. We're prideful. So my suggestion is early on, raise your hand. I need help. I need help. And look, maybe the situation, maybe you lost your job, maybe something really horrific happened, and if so, it's terrible. But I would encourage you to reach out for help, reach out for counsel, reach out to, a real estate agent, reach out to a financial planner, reach out to a loan officer, talk through maybe what options there are out there, talk through what you can or can't do, reach out to your bank or your lender who has your mortgage and talk about, hey, are there solutions? Is there a forbearance that I can do? Is there something where I can, defer payments, right? Nobody wants to foreclose on anybody, right? But again, if people just kind of go dark and there's no communication, that can be a challenge, right?
We are in the real estate market, you're in the mortgage industry, and first-time home buyers are scared of this market, right? Are scared of the commitment, are scared of getting out of that bubble where they are at right now. We talk about the benefits of purchasing a property, the benefits and the advantages of getting out of that rental track where they are at right now, for some of them, right? So what is the best advice based on your over 30 years of experience in the mortgage industry that you can give to all these first-time home buyers out there who are afraid of becoming homeowners?
Well, look, I think you want to identify what the fear is about, right? It's normal to be fearful of buying a home, right? There's two pieces that I've learned that people become afraid of. One, I won't qualify. So there's a fear of I don't want to be rejected. Mm-hmm. And then two is I will get that loan and then I'm married to it for 30 years, right? So it's that long-term commitment. And so that fear of buyer's remorse, they call it, that's normal. And so I think really is looking at it and saying, hey, what can I learn? Let me educate myself. Let me make sure I understand the home buying process, the home ownership process, what that looks like today, what it looks like in 5 years, 10 years. What do I want for me as an individual? Maybe I don't want to be tied down by a home, and that's okay. But maybe I've learned so much that it makes total sense for me to buy a property, and it probably makes sense for me to buy a few properties. And I want to be a homeowner, and I want to own multiple homes, and I want to create financial freedom through home ownership. It could be that, right? But until you educate yourself through talking to real estate agents and talking to lenders, you don't know. And look, there's a lot of things we can be fearful in life that we don't know about. And once we learn about it or do it, it makes a difference, right? When you're a kid, you're fearful to get on that bicycle to ride that bike. And then once you start riding it, you fall down a few times, you get up and you learn how, you never forget, and it's easy. You're not afraid anymore. And I know that's a simple analogy to home ownership, but really I think the fear, a lot of times it's just the fear of the unknown.
Right. Mm-hmm. And we make it, the way that you said it is so simple and so easy, buying a home and then buying multiple properties. Mm-hmm. It sounds like so easy, right? And it is actually. Yeah. The first property, it's the hardest. Mm-hmm. That's what I say, to my clients most of the times. And the second property becomes easier. And the way that I see it, once you buy this first real estate asset, you build equity, you have a chunk of money that you can use for the purchase of another one.
Absolutely.
And you have many options with this asset. Yep. You can rent it, you can sell it.
Right.
A lot. So I completely agree with it.
Yeah, I think that's why it's so important to talk about goals and talking about having the end in mind and saying this is where I want to be in X amount of years, and then how do we back into that, right? And so we have those daily habits that we need to put into place as wanting to buy that first home, wanting to buy that second home, wanting to buy that third home. And that's why it's important to us to have clients for life, so we can come alongside every 6 months or so and say, hey, Ever, how are you doing with saving up for that next home? Oh, by the way, guess what? Your home over the last 6 months appreciated 5%. So now this is where we're at. Hey, you can use a portion of that to buy another property. And that's part of the coaching process that we want to do after people close their first home with us, and so on and so forth.
Right. Mike, thank you so much for your time today.
My pleasure. Thank
Mike,
you.
Vice President of Caliber Home Loans. And, just by staying here with you, hearing all these words of wisdom, is so helpful for a lot of people out there.